Welcome to the Deep Dive. Okay, so this week, Dogecoin. It's been grabbing headlines again.
It certainly has a pretty big price surge.
Yeah, 36%. But, the big question we're trying to tackle here is this rally actually sustainable? Or is it maybe running out of steam already?
That's the core issue, isn't it? We've got some analysis here from Being Crypto, actually, that digs into what might be going on underneath.
Right. And it looks like our mission today is really to understand, well, what is driving the price? And crucially, what does this selling activity by long-term holders mean for you?
Exactly. It's easy to get caught up in the excitement of a price jump, but this analysis points to something potentially concerning happening behind the scenes.
Okay, so 36% up sounds great on the surface.
Absolutely.
But this analysis immediately kind of throws some cold water on it, talking about selling pressure.
That's right. Significant selling pressure, specifically from long-term holders, or LPHs as they're often called.
LTHs. Let's break that down a bit. Who are these holders, and why is their selling suddenly such a big deal?
So think of LTHs as the seasoned Dogecoin investors. People or groups who've held onto their coins for, say, a year or more, often through all the ups and downs.
The diamond hands, perhaps?
You could say that, yeah, or at least they were. Their actions matter because they usually represent, a certain stability or long-term belief in the asset. When they start selling in large amounts,
It makes you pay attention.
exactly, it can signal a shift in outlook or maybe just taking significant profits off the table. Either way, it impacts stability.
Okay, and the analysis mentions a specific metric here. Age consumed. What's that about?
Ah, yes, age consumed. It's a neat on-chain metric. Basically, it tracks how many old, dormant coins are suddenly moving. It multiplies the number of coins by how long they've been sitting idle.
So a spike means?
A spike means a lot of old coins are being transferred, likely sold. And the analysis says this recent spike is sharp, really sharp.
How sharp are we talking?
We're talking the heaviest selling in almost 2 years. The last time we saw anything like this was back in June 2023.
Wow, okay, nearly 2 years. That really puts it into perspective. So these long-term believers are suddenly moving coins on a massive scale.
It seems so. And that naturally leads to the question, what are the consequences?
Yeah, what does this mean for the price, for the rally?
Well, the most immediate potential impact is increased volatility. Suddenly, there's a lot more Doge available to buy, right? That influx of supply can push the price down.
Counteracting the rally we just saw.
Precisely. And it creates uncertainty. Shorter-term traders might get spooked if they see the long-term guys selling off. Kind of erodes that feeling of underlying conviction.
Okay, so the LTH selling is a major headwind. What about technical indicators? The analysis mentions the Ichimoku cloud.
Right, the Ichimoku cloud. Think of it like a complex weather map for traders. It shows potential support, resistance, trend direction, momentum.
And what's the forecast for Doge according to the cloud?
It's a bit murky. Mixed signals, really. The price itself, the candles, are currently above the cloud.
Which is usually good, right? Bullish.
Often, yeah. It can suggest an uptrend might be forming or continuing, but, and this is the key part, the indicator also shows that bearish momentum persists.
So the price popped up, but the underlying trend hasn't really turned positive yet.
That's a good way to put it. And the analysis connects this lingering bearishness directly back to that LTH selling pressure we were just talking about.
Ah, okay. So the selling could actually drag the price back down, even if it's technically above the cloud right now.
Exactly. The idea is that sustained selling from these significant holders could absolutely reverse this momentum and quickly dampen any optimism, despite that signal from the price position relative to the cloud.
It sounds like a very delicate balance then. This rally is facing a serious challenge.
It really is. The LTH selling is acting like a strong gravitational pull downwards.
Let's talk concrete numbers then. The analysis must mention some key price levels to watch.
It does. So at the time of the analysis, Doge was trading around 0.234 cents. The really crucial level they flag is the support at due till 32 cents.
220 cents. That's the floor we need to hold.
That seems to be the critical immediate support, yes. If the price breaks below that,
Then what?
then the analysis suggests we could see a fall towards 0.198 cents.
Oof. That would, as they say, erase a significant portion of the recent gains.
It definitely would. Falling to 0.1988 would be a strong signal that the bears, fueled by that LTH selling, are taking control. It could trigger more selling too.
A cascade effect?
Potentially, yeah. But there's always the other side. What if 0.222 cents holds?
Right. What's the bullish case here? Is there still a path upwards?
There is. If -220 cents acts as a solid floor and the price bounces, The next hurdle is around 0.245.
Okay, 0.245 cents. What needs to happen there?
Buyers need to push through it and then, importantly, turn that level into support, flip resistance into support. If they manage that,
That would be a positive sign.
a very positive sign, according to the analysis. It would suggest buying pressure is starting to absorb that selling pressure.
And where could it go from there? If 0.245 cents becomes the new base?
The next potential target mentioned is 0.268 cents. Getting there would really start to invalidate the bearish outlook
Yeah.
that this LTH selling has created.
So it really is a tug of war, the 36% pop versus this heavy long-term selling. And 0.220 cents is kind of the battle line right now.
That sums it up well. And the analysis really emphasizes, that recent gain is quite vulnerable to a decline below $0.200 if this selling keeps up.
It really highlights how fragile these crypto rallies can be sometimes.
Absolutely. Sentiment can shift quickly, especially when long-term holders change their behavior.
Okay, so wrapping this up, we've got Dogecoin, a big 36% jump, exciting stuff. But underneath, data from Bean Crypto, especially that age-consumed metric, shows heavy selling from long-term holders the most in nearly 2 years.
Right, and that's casting a shadow, creating volatility, and potentially undermining the rally.
Technicals, like the Ichimoku cloud, are mixed. Price is above, suggesting potential, but momentum is still bearish, likely because of that selling.
Which could pull it back down.
Key level, 0.202 pence support. Below that, risk of falling to 0.198 cents. But if it holds and breaks 0.245 cents, we could see a push towards 0.266 cents.
It's a really dynamic situation, highlighting that classic crypto tension.
Yeah, exactly. So as you think about all this, that tension between the quick jump and the long-term holders cashing out, what does that really tell you about conviction versus profit-taking in crypto? And, with Doge being Doge, how might some random external thing like a tweet or some other news just completely change this picture again? Something to ponder. Thanks for tuning into this deep dive.